I want to get to our first guest because he has been adamant about his position. He's been 100% right. Key Advisor Group CEO Eddie Ghabour. Eddie, all right, my man. So far in 2020, if I had to give you a costume, it would be the Dark Knight, okay? It's worked for you and your clients. But are you going to stay on the sidelines?
We are right now. We're going to stay on the sidelines here, Charles, with the cash position we have. I do think right now, near term, one thing we're going to watch is see how the market reacts to the CPI data that comes out next week and the job market that comes in. If they come in as hawkish numbers, we may take another leg down and hit new lows. And at that point in time, we will put a little cash to work, but we want plenty of dry powder because ultimately what's going to come from this bear market is some of the best buying opportunities we've seen in over 20 years that can create some generational wealth.
Right.
So you can only take advantage of that if you have dry powder.
So to that point, Ray Dalio saying that he changed his mind because he said the facts changed. I'm going to be quite frank with you. I'm not sure what facts just changed recently that makes cash more appealing here. We had an ugly ISM number yesterday, and of course we had that major downgrade in job openings. So the facts right now, to your point, tend to lend themselves to, maybe the Fed at some point maybe having an epiphany.
Yeah, look, the facts haven't changed. They've just gotten worse. We've been talking about this with our clients and your viewers since the end of last year, that the economy was going to be slowing down. And from a rate of change perspective, it's getting worse. And that may be what he's referring to. And when you tighten monetary policy into that environment is when you get these downdrafts. And that's what we've been living through. But look, the Fed put themselves in trouble. If they said today they were not going to raise rates, right, the asset prices that they're trying to keep down are going to go through the roof.
Yeah, but again, it's tough. There's a lot of things they're dealing with that no Fed has probably ever had to deal with. Let's talk about when you might get back in. And one of the conundrums right now, one of the reasons a lot of people are bearish, they're saying that individual investors, here's the equity holdings of most households right now, that it's right around the same level it was right before that infamous telecom tech crash. So a lot of folks are saying this is too high. On one hand, though, you have cash that's moving higher. You have bonds which are moving lower. This is equity. This is what the average household is holding. If I'm looking at this, where do I really want to be as a long-term investor, though? Do I want to be in cash? It's fine maybe now. Do I want to be in bonds after the 40-year bond market rally seems to be broken for a long time? Or do I want to risk it even though Wall Street says too many people own stocks?
So look, here are some of the things that we're looking at. Of course, long-term, in our opinion, we're long-term bulls, so our cash position is short-term. And look, 6 months, 8 months is not a long period of time. A lot of investors feel like they have to be fully invested all the time. So I need to see the dollar stabilize. I need to see the VIX get us that capitulatory moment. We have not had that yet. I expect the VIX to be in north of 40, exactly. People think this time may be different. I think that's the kiss of death when people say that. It just hasn't happened yet. And lastly, we do need the Fed to pivot. In my opinion, we are not going to get this market where we need to be if they continue to suck liquidity out of the system during this time period. I think when you look under the hood, things are more fragile than they're leading us to believe on the equity side, as well as what's happening in the fixed income markets.
Yeah, and I do believe there's some issues with this economy, although unfortunately not all of it can be fixed by making the economy slower. Hey, before I go, what are you dressing as for Halloween?
Charles, after the type of market we've lived through this year, I may have to dress up like a bottle of bourbon because every weekend I seem to be sipping on some of that.
All right. Well, I know on the weekends you've been drinking champagne because you've been right, but bourbon sounds about right. Thanks a lot, Eddie. Talk to you again real soon.